reported a weak set of the first quarter earnings. We spoke with the management. Let's hear out what Amit Syngle, the MD and CEO, had to say.
So actually, if you look at from the point of view of overall growth, even in quarter one, we've kind of got about a 7% volume growth, which has kind of come in. We have seen that despite a very tough quarter where the retail was affected in April and May, we have kind of seen good demand coming back in June in terms of giving us a double-digit volume growth, which has happened in the month of June overall to that extent. We have seen the rural demand uptick, which is happening, which is also another phenomena in terms of what we see would kind of get strengthened in the future as we kind of go ahead with better monsoons in terms of how we have seen the progression. The other area is the B2B segment, which was affected very strongly in the month of April, May, largely because of a government freeze with respect to their infrastructure spends in other areas to that extent, has really given us a good kind of impact, which has come in the month of June. And we feel that going forward, that would be one big area which would kind of really keep on stimulating the demand, both from the point of view of government spending, infrastructure going up, factories which are coming up, and the other area is the whole area of industrial. I think these are some areas which we are seeing definitely coming back strongly to that extent, which gives us an idea that possibly going forward, I think the double-digit volume is something which we would like to kind of maintain.
You know, for the last couple of quarters, the reported growth for Asian Paints, if you size up all the other players in the industry as well, has been among the slowest, and that's very unusual. What we're trying to get at is that, is something structurally changing? What exactly has happened during the quarter? And over the last few quarters where your reported growth has been lower than the peers?
So overall, if we see, the general band in terms of what is coming is in the range of still about a 1 to 2% kind of a band. It's not that the band is kind of really vitiated from any other players to that extent. And it's a mix of the performance in terms of what we are seeing from the general industry. But by and large, that band is something which is consistent in terms of what we are seeing. Overall, what we are definitely seeing is that given the largest player in the industry overall, to that extent, I think if there is a slowdown, it affects the leader the most in terms of what we see from a demand point of view to that extent. And that is something which we are feeling that in some of the belts, especially when we see some regions across the country where the shares are higher and so on and so forth, any demand effect which happens is something which will affect the larger player a little bit on a higher side to that extent. The second area which we see is that our industrial sales contribution is smaller than some of the other existing competition players to that extent. And the industrial growth has been on a higher uptick given the fact that whether it is auto, whether it is the general industrial protective coatings, or in terms of the industrial B2B business, I think that has been a shade better overall in the last about 6 months or so, which has kind of contributed to the additional 0.5 to 1% kind of a increment in terms of somewhat the existing players are showing.
So would you say in the first quarter, we don't have numbers from the others yet, you would have done better than the others in the decorative side of things, or at least at par?
I would say that in general, the industry would be overall down in terms of things. As far as the decorative sector is concerned, we would be almost at par or slightly better than the other players to that extent. In industrial, possibly some of the other players might be a notch higher.
So two-part question then. One, you said you are gunning for double-digit volume growth this year. If you could give us a range, is it going to be 10 to 15%, 15 to 16%, 10 to 12%? If you could give us that range, that's point number one. And secondly, 1% price hike has been already taken. In the next couple of months, what is the extent of price hikes that you can take?
So first of all, when we look at the overall inflation in the current quarter, it has been a little bit unprecedented. We never expected it was about 1.8%. Going forward, the prediction is that it could kind of go anywhere between 1.5% to about 2% to that extent in terms of what we are seeing. Overall, obviously, as we look at it, we don't want to pass the entire burden onto the consumer and want to do some balancing in terms of our internal initiatives as well. But definitely, as we look forward, anywhere between 0.5 to another 1% is something which is in the offing if this kind of inflation continues.
And on the volume front, what is the target?
Volume, quarter two, definitely. I think as I said, we are looking at closer to about 10% in terms of the overall numbers, in terms of what we are seeing. 10 to 11 is something which we would kind of really right now peg the number at.
And for the entire year?
I think it is at this stage a little bit early to say about the entire year to that extent, but I think first come first, I think we talk of quarter two, and let's see in terms of how the festive demand really augurs as we look at the year.
You know, you have been speaking about poor consumer sentiment, unprecedented inflation right now, and then the street has this fear of competition as well. So it's a trifecta of problems, so to say. Which of these issues worries you the most? Which of these are you least worried about?
So overall, I think given our distribution, our reach, our spread across the T3, T4 is also very, very strong. I think the uptick coming from the rural and the smaller towns is something which worries us the most in terms of what comes in, because that is a demand uptick which has to happen, which will be a little bit of a propellant in terms of giving us the entire sales. The second area, which is very, very important, is the uptick with respect to the premium and the luxury segment in terms of what we see. We have seen a little bit of downgrading as well, which has been happening in the T1, T2 cities overall to that extent. That is one area which is a concern to us, because if that area doesn't improve, it kind of affects our value mix in a very strong manner in terms of what we see going forward, and that has a larger impact in terms of the overall performance. And the third area which we see is the institutional builder segment specifically, where it is a large segment, and if the construction activity, which is good as of now in terms of what we expect, but that is a big propellant in terms of the overall B2B sale, which kind of happens in terms of going forward. So I think I would kind of really peg myself on these three areas, if you look at in terms of as being a clear source of growth as we go ahead.
18 to 20% margin guidance band, you would look at it at a higher end of the band or lower end of the band? Because right now you're absolutely in the middle, closer to 19%.
So I think we would like to be definitely around the 20% kind of range in terms of going ahead. But definitely, I think something around 19 to 20 is we would like to kind of maintain.
We've seen an increase, a marked increase in your employee expenses, other expenses. You are improving your distribution and all of that and stuff. Any senior structural management leadership changes in the offing?
No, not anything at the overall top level management in terms of what we are kind of looking, but largely we are looking at giving ourselves a far more stronger focus imperative as far as our overall distribution structure is concerned. Given the fact that we keep on adding many distribution points, and over the past about 3-4 years, we have really exponentially added the number of distribution points, and we are closer to about 1.65 lakh retail points. I think we are adding a lot of manning in terms of from the point of view of the front line and the level next to it, which is a supervisory level to that extent, so that we are able to kind of reduce the span of control, have a better focus, and able to really augment various initiatives in terms of what we are taking in terms of reaching out to the consumer.
You know, when we speak to you, we also speak through you about all things in the industry. Being the industry leader, you've been able to take price hikes in an unprecedented inflation time, at a time when, you know, there is competition as well. How should we look at that? Have you been able to size the competition up yet? They've been in operation for more than 100 days. Do you think the intensity is stronger than you anticipated, or is it weaker than you anticipated? How are you managing that?
So I think overall, like what we have been maintaining, I would like to maintain that it is as per our expectations. We didn't see any big kind of disruption happening in the market overall to that extent. I think overall the newer competition is also struggling in terms of finding their own ways in terms of going ahead. But I think it is still early days to see in terms of what they're doing and how they are kind of progressing forward. As I've always maintained, on an 80,000 crore industry, I think the cumulative new competition in terms of the 3-4 players who have kind of come in, even if they log in even a 2% or 3% of the total number, I think it doesn't really impact the overall industry dynamics in terms of going forward to that extent. So as I have maintained, I don't think so that it is something which is from the point of view of numbers going to make too much of the difference. Yes, the market sees a lot of areas in terms of what is happening, a lot of distribution points get affected. Sometimes the dealer sentiments get affected overall to that extent. But largely from a point of view of numbers, we are still maintaining. I don't think so that this year is something which we will see any movement in terms of largely the market configuring very differently.
All right, not this year. So let's wrap it up with your this year's numbers. You said that the gap between volume and value would be around 5 to 6%. So to that extent, can we expect you to do margins upwards of 19%, mid-single digit sort of revenue growth for the full year? If not for the full year, at least the next quarter where you have more visibility?
Definitely, I think the Q2 is something where we are aiming in terms of looking at that kind of objective, in terms of looking and definitely improving our margins as we go ahead. And that is something which we are putting our full force in terms of the imperative, in terms of bringing it back. And I'm confident that we should be able to get that going.
All right, that was the management of Asian Paints speaking about double-digit volume growth for this year. In this particular quarter, the second quarter, 10 to 11% volume growth with margins close to around 19 to 20%. More importantly, they've already taken a price hike of about 1%, but in the very near future, they anticipate another 0.5 to 1% price hike as well. We take a short break on that note, come back.